Welcome to the Big Four Accounting Firms podcast, brought to you by big4accountingfirms.com and the Big Four Accounting Firms YouTube channel. Before we get started, just wanted to remind everybody to support us if you have a chance or if you can. Even $1 helps, and we have a link in the description to a website called Buy Me a Coffee. It's just a way to donate to us and support us. Again, any amount is helpful so that we can keep putting out content. And there's also other ways for you to support us in the show notes to this podcast or on YouTube in the description. In today's podcast, we're going to discuss a couple of news stories again. Before we get to that, I wanted to remind people to check out the poll that we have going on Twitter about which accounting firm you would like to join. We already have some few votes. I know haven't been super active on Twitter, so that's probably why people aren't, but I'll put the link to that poll in the show notes. Really like some feedback. Right now, Deloitte is lagging, which I did not expect. But let's get to some news stories. So yesterday and recently, we've been talking about social justice and climate change a lot recently because it's everywhere. You can't avoid this stuff. And you might be saying, how is that going to apply to me at the Big Four accounting firms? Well, I think it's going to apply to people in several ways. I think you're going to have to take it to your clients no matter what. Social justice services. And I don't think it's necessarily because clients are clamoring for it. I think people are worried about cancel culture and they want to take credit for this. Businesses have always taken credit for impacts on society, at least in the past 20 or 30 years, because there's this whole thing of societal impacts of corporations. And so people have been paying more attention to it, and companies warp whatever they can and take credit for whatever they can. And so this is going to be like a dessert as far as service offerings for the Big Four. I don't think it's going to be anything primary to them, but I don't think you can go to a client without at least offering something social justice, like pointed towards social justice. And I was wondering yesterday, if you remember, that we have it in consulting because we saw Deloitte's offering criminal justice reform services. I'm sure the other Big Four are doing the same. We've seen it in audit because we saw the ESG requirements. And so the ESG requirements have been around for a little bit now, and they're heating up because of ESG investment offerings in public markets. The SEC in the US has focused on that, and I'm sure regulators around the world will be focused on that. And I was wondering, how is this going to impact taxes? Well, I got my answer. Accounting Today did an article in the U.S. The U.S. Senate Democrats introduced legislation to give small businesses owned by women and people of color greater access to capital through tax incentives. I don't think it's going to get more access to capital based on what I've read. It's just going to be a tax credit. And that makes sense to me because I was wondering how they were going to do this, because if you're a business and you have to pay income tax, you have your income and revenue, and then you have deductions against that. You can't really take social justice deductions. I guess if you're investing in things like solar, but that's for climate change. I was wondering about the racial equity and gender stuff, how that would be part of the solution, because it's kind of hard to weave that into an income category, deduction category. But now we have our answer. It's going to be a tax credit. And it's because they're putting bills together to raise the income tax rate. That's something the Democrats in the United States have said they're going to do. But in addition, they're going to give a tax credit for small businesses. You can get 25% of your W-2 wages. It's a credit equal to that, and up to $10,000 in a single tax year with a lifetime limit of $40,000. People have to earn $100,000 or less per year. So this is aimed towards small businesses. And I think the specifics aren't necessarily relevant to you if you're going to be in the Big Four accounting firms, because the Big Four accounting firms aren't necessarily going to offer services to these types of businesses. What is going to happen is that bigger businesses, the Big Four accounting firms' clients, are going to lobby for similar tax credits higher up the chain, and it's going to have to be on something like number of employees that are diverse. So there's going to be more to come. And now we see, as I predicted, that this is going to impact every single line of service in the big four accounting firms. Now it's going to be probably I don't know. I think it's going to affect them equally, right? Because in order for larger businesses to take advantage of this, they're going to have to get really good consulting from the big four accounting firms. Even if this tax credit does end up only applying to small businesses, big businesses are going to try and make sure that they get this somehow through various structuring things. They're going to try to structure their businesses as small businesses. There will be a way that they get around this. And I'm sure that they're going to lobby Congress to get something that applies to bigger businesses related to diversity metrics. But we see how that doesn't always work, because no matter how hard the big four accounting firms themselves try to hire more diverse people, they really struggle with it. Okay, the next thing that I wanted to cover was also, both of these things were covered in Accounting Today. I recommend that website. It's primarily focused on US accounting things, but they cover some things that apply everywhere. And they covered a study that was recently conducted that was in the Journal of Accounting and Public Policy, and it's the cost and benefits of retirement policies at US audit firms. And it's related to the mandatory retirement age at the big four accounting firms. We discussed this on here. In Australia, the big four accounting firms are being sued for making partners retire early. And the study was, they studied the age of 3,000 plus US audit partners, and they wanted to see the cost and benefits of mandatory retirement policies. And they wanted to see if this impacted the quality of the audit, because their theory was that older audit partners might be mailing it in. Like, you might be coasting into retirement, and therefore you're not reviewing the audit that you're on very closely. And they wanted to look into this. And shockingly enough, they realized the age of the partner doesn't really matter. And basically the older partners are doing just as good a job. But I think, and this ties into the social justice stuff, right? Because you have to pick a side. You have to pick a side of whether you're on aging partners, whether you're on the side of aging partners, or whether you're on the side of diversity. Because if you keep aging partners, the aging partners are in the diversity metrics that you don't like, because the diversity metrics of the big four accounting firms right now, especially in the US, aren't where they should be. So if you want older partners to stay, then you're not going to get the diversity. However, if you're in favor of younger partners, then, I mean, you are going to get the diversity, but you're going to be discriminating against older people. And that's going to run into problems. And those partners have the most money, so they're probably going to keep suing over this issue, because it's good money that they're suing over. But the end of the study doesn't shock me at all, that older partners do a good a job as younger partners. And I could have told these people doing the study that ahead of time, because it's not the partners that are doing the work. It's their senior managers, directors, managing directors. And if you're in the big four accounting firms, you know that. It's not the partners doing the work. By the time people make partner, they're not the one doing the grunt work anymore. That's just basically the definition of a partner, somebody that you're doing a very high level review, but you're mainly involved in winning more work. And so this study does not shock me at all. And another thing that this proves is that a lot of the people that do these studies in universities don't really have that much experience in accounting. So they just come up with these theories and they conduct these studies. I mean, probably because they're PhD students. They don't have the experience. So they have these weird theories, and they just try to apply them to the accounting firms, and they really don't understand the nuances of the accounting firms. And there's so many things that go into audit quality that I can't imagine an accounting PhD student would understand, or even a professor. But things like this, it just, I don't know why they did this study. It's probably just, it's hard. To me, it's easier to do studies in college if science-based, like a science-based major, but accounting is just a weird area to conduct research in. Because there's so many things. There's so many things involved, whether it's the audit firm, whether it's the client, the CEO, the board, the industry. So many more nuanced things that you're not just going to know about if you're an academic. You have to be in there. You have to be in the boardrooms. You have to be involved in client work. You have to be involved in the politics of the accounting firms. Because if you're an academic, you're not going to understand the politics of the accounting firms. You might understand politics in business at a high level, but it's just very nuanced at the accounting firms. So those are the updates for today. To get future updates, make sure to subscribe to this podcast. Support us financially through the Buy Me a Coffee link in the show notes if you can. And also like this video on our YouTube channel and subscribe to our YouTube channel, Big Four Accounting Firms. Thanks for listening.